We're a country where, here again, $8.9 trillion in government debt, or 25% of all the outstanding debts on balance sheet anyway, pretty damn close to it, has to be refinanced at much higher rates over the next 12 months. And, when you see countries like China selling treasuries and buying gold, things are changing. And I think gold is being remonetized in the world's view. Gold, because it carries no counterparty risk, because it's outperformed the bond market, is being looked at as a substitute to the bond market. I believe that. I really do believe that. And so I think the world is looking at gold a little bit differently now than it has been perceived for quite some time. And
gold has been experiencing a remarkable rally recently, driven by investors seeking refuge amidst looming economic uncertainties. Concerns about the risk of recession, persistently high inflation levels, and geopolitical tensions emanating from the Middle East have fueled interest in the precious metal. Billionaire investor Ray Dalio has warned about the growing debt levels worldwide, particularly in the United States, where debt has surpassed $34 trillion. He has sounded alarms about the potential debt crisis, which could trigger a balance sheet recession. In such a scenario, gold is expected to perform exceptionally well, serving as a safe haven asset amid economic turmoil. Moreover, there's a growing sentiment among foreign governments to diversify away from the US dollar as the global reserve currency, potentially leading to a surge in demand for gold. Andy Schectman, CEO of Miles Franklin, acknowledges the dollar's strength internationally, despite domestic inflation concerns. However, he views this strength as short-term, believing many countries would prefer a weaker dollar in the long run. This preference could drive central banks to increase their gold reserves, positioning gold as a stable alternative to the dollar. Central banks worldwide have already begun increasing their gold holdings in anticipation of a potential shift from the dollar. China's strategic decision to diversify its reserves by acquiring more gold underscores the growing recognition of gold as a dependable asset with intrinsic value. This trend reflects a broader shift in perception, with nations seeking to mitigate risks associated with volatile currencies and geopolitical uncertainties. As global uncertainties persist, gold remains a trusted store of value for investors and central banks, making it an attractive option in economic turbulence and offering protection against currency devaluation. We will present clips from Andy Schectman's interview with Arcadia Economics. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
And I keep going back to gold being the only other tier one reserve asset, as mentioned by the Bank of International Settlements. I keep looking at all the gold that not only has been purchased by all the central banks, but also repatriated. And interestingly enough, even through a Freedom of Information Act, we're not finding out how much gold has left the Fed, who's been bringing it home, and why don't they want to tell us. So, yeah, I mean, and if you look at the strength of the dollar, it's crippling a lot of countries right now. The strength of the dollar, it's very unusual. Even though the people in this country have seen their purchasing power get clobbered through inflation, the strength of the dollar around the world is outpacing much of that inflation, and it's making it very, very hard for a lot of these countries to purchase commodities that are valued in dollars. And a lot of people think it's because of all the dollar-denominated debt creating the demand for dollars to pay back the debt. And maybe that's the case. This is a short-term strength of the dollar as far as I am concerned. And I can tell you that much of the world would really like a dollar that isn't as strong as it is right now. And George Gammon did a very interesting podcast on this very topic recently, talking about how many, many countries are really struggling under the strength of a dollar. And that strength is completely and totally unjustified. And we are witnessing record debt accumulation, $1 trillion every 3 months, where we're a country that, it's 175 trillion in the hole. And I was looking at something the other day, 77 trillion underfunded in Social Security, Medicare Part B being the largest liability, underfunded by 99.5 trillion. Medicaid D, or Medicare D, which is for prescription drugs, missing 22.1 trillion. And, we're a country where, here again, $8.9 trillion in government debt, or 25% of all the outstanding debt that's on balance sheet anyway, pretty damn close to it, has to be refinanced at much higher rates over the next 12 months. And, when you see countries like China selling treasuries and buying gold, things are changing. And I think gold is being remonetized in the world's view. And maybe this is why it was reclassified tier one. Certainly, there's been a lot of talk, and certainly you and I have talked about it a lot, that, and you hear Vince talking about, a lot of people talking about that gold, because it carries no counterparty risk, because it's outperformed the bond market, is being looked at as a substitute to the bond market. I believe that. I really do believe that. And so I think the world is looking at gold a little bit differently now than it has been perceived for quite some time. And will have a very pivotal role moving forward. And certainly if Judy Shelton gets in behind Trump and is the head of the Fed, and they move in that direction, it is a massive step in the right direction to gain credibility. The latest being, we talked about certainly Iran has been sanctioned, and Russia and the weaponizing of the dollar. We talked about, you sent me the article actually about China being threatened with sanctions if they aid Russia in any way whatsoever in terms of the military. Forget about the fact that they're allies. We can aid the Ukraine, but they can't aid Russia. And Janet said this in a CNBC interview last week. I mean, that's from the too stupid to be stupid category.
As central banks increase their gold reserves, the retail market for precious metals is experiencing a contrasting trend. Despite the rise in central bank purchases, premiums for gold and silver coins have declined, partly due to sluggish sales from the U.S. Mint. Sales of American Gold Eagles notably dropped by 20.7% to 988,000 ounces, signaling a significant decrease in demand compared to previous years. Although concerns persist regarding shortages in industrial bars and delivery delays on exchanges, premiums for gold and silver eagle coins remain surprisingly low. Andy suggests that while shortages are hinted at, especially in industrial bars, they have yet to impact the retail market. The situation with ETFs adds another layer of complexity, with uncertainty about whether share redemption drives these movements rather than actual delivery from COMEX. Interestingly, while the U.S. public appears unaware of these trends, China's ETF market has witnessed a surge in numbers, resulting in trading halts due to overwhelming demand. This disparity in perception between the U.S. and China could be seen as a contrarian indicator. Despite this, prices continue to rise, prompting questions about the sustainability of current trends and the potential for further price increases in the future.
The only change in premiums we've seen are really in the American Gold and the American Silver Eagle. There's still great demand for them. And, nothing else really has spiked yet, but I would argue that's a precursor, the gold and silver eagle. The premiums are still very low. You got guys all over the place like Ted Butler screaming about the shortages in industrial bars around the world, and the deliveries off of all of the exchanges and all the things that we're seeing that point to a shortage. It is not happening in the retail market yet. With the sell-offs in the ETFs, I said that to Bill Holter, by the way, our mutual friend. I said, Bill, you look at the ETFs and the drawdowns out of them while the price has been going up is crazy. He says, but how much of that was share redemption, where, big money is redeeming their shares in an opaque fashion rather than delivery off of COMEX? And he's got a point. Maybe it is. Whatever it is, it sure looks like, when you look at the ETFs and when you look at the public participation, who, has been enamored with, and rightfully so, with great performance in NVIDIA and all AI and Bitcoin and all of these things that, have really, taken the limelight away from gold. It's the tortoise, not the hare. The performance of gold has been nothing short of extraordinary, let alone, or take away the $61 drop in gold. I see it's come up a little bit here right now, but it's up considerably, several $100s in a very short period of time. And silver in the last week or two has start to show just how strong that volatility can be on the upside too. So, it's real, but the public isn't noticing it yet. And you compare it with what's happening in China. Their ETF numbers are off the chart. They've triggered stops in their ETF market because the demand is so high that it forces, breakers to shut down. And, The demand in many parts of the world is insatiable. Here in the United States, they're missing it. And I look at it as a huge contrarian indicator. If prices keep rising in the face of positive real returns and a strong dollar and a public that's really not involved, arguably at one of the lowest levels I can ever imagine in a market that's showing this kind of strength, what does it mean? Does it portray for much higher prices? I guess we will see. But the fundamentals that we're talking about, debt and all the geopolitical stuff and all the stuff that's going on here leading up to arguably the biggest election of our lives and the big meeting in October, the BRICS. I mean, you would think that it would demand far greater attention. But, the fact that it's not, to me, I almost find comforting in a strange sort of way. I guess we'll have to see. Only time will tell. But yeah, premiums are only on the silver and gold eagles have come up. Everything else, status quo, still very, very cheap in my mind.
As economic uncertainty looms and concerns over currency devaluation grow, gold emerges as a highly sought-after safe haven asset. The ongoing escalation of global debt, particularly in the United States, raises alarms about a looming debt crisis, further bolstering gold's appeal as a safe haven amid economic turbulence. Will gold continue to shine as a beacon of stability in economic uncertainty? Do tell us in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.